What up, Hyperchange? Welcome to another episode. Today we're talking about Beyond Meat and the company's recently announced Q2 2019 financial results. Just got off the conference call. Really impressive quarter by the company. Personally, way above my expectations. I've had to revise my projections up for both revenue and earnings for the next couple years. A lot of interesting stuff to unpack. So in this episode, we're going to break down what happened in the earnings and the conference call and what I think about Beyond Meat stock. So Beyond Meat stock has been on an absolute tear. They priced their IPO at $25 per share just 3 months ago. The stock opened trading at $40 per share. And as you can see, since then has been on a straight line up essentially to about 200 and it hit at one point almost 230, 240 bucks a share. Now trading about 207, 210 as I make this episode. But the company is worth about $12.5 billion, as much as some huge established players, despite being a tiny startup. So it's been a really, really interesting company to watch. And so especially to look under the hood at the financials. Welcome to Hypercharts world. Now you can go to hypercharts.co/BYND to follow along if you want to check out the financials for yourself. So this is what Beyond Meat's financials are looking like, revenue and operating income. Let's quickly zoom in on revenue because this is what I thought was most impressive is their ability to grow sequentially in both year over year. They grew almost 300% year over year, 67.3 million in revenue, up from 40 million just the previous quarter and up from 17.4 million the same period the previous year. So almost tripling year over year revenue, explosive growth from Beyond Meat. If we go to the gross profit, this was equally impressive, 23 million, more than a double from the previous quarter and more than up about 10x from the same period a year ago. So the not only is the revenue exploding, but the profitability of that revenue is exploding as well for Beyond Meat. And what does that lead to? Positive operating income. That's right. The company actually made money on an operating income basis, a profit of about $2 million. So Beyond Meat, in short, we're looking at a company that is exploding in revenue growth, exploding profitability of that revenue, and now actually making money. So some of that crazy hype is looking like it was justified. The net income here, it looks like they lost money about in line with what they used to. But that is because of a one-time accounting adjustment that wasn't really reflected in the core business, just one of the reasons I like to use EBIT. But now let's zoom in on gross margins really quick because I think this is where the company is really shining. And as you can see, 26.7% gross margin in Q1 2019, up to 33, almost 34% in Q2 2019. So huge improvements there. The operating margin of the business going positive once again. So everything going in the right direction here for Beyond Meat. We can scroll down the operating expenses. The expenses are growing, but nowhere near as fast as revenue. I always think it's interesting to highlight the R&D because at its core, I do think this is really an R&D company. So you can see they're starting to put more and more money into research and development, but still 4.2 million a quarter. Yeah, sure, it's up from 2.5 million in Q2 2018, but it seems like nothing. And this is why I'm questioning the moat of Beyond Meat. If they're only spending, 20 million a year or less on R&D, how big of a moat really is there in terms of developing a plant-based product? Companies like McDonald's, like Chipotle, like some of these huge QSR food players who Beyond Meat should be, desperate to partner with, I think have plenty of budget to develop this same product themselves, and we're seeing that here in the R&D. But anyway, moving on down to operating as percent. Anyway, moving down to operating expenses as a percentage of revenue, you can see everything going in the right direction there as revenue continues to expand. This chart, really, really interesting and worth highlighting. The growth is off the charts, accelerating on a percentage basis, almost 300% in Q2, but the expenses, yes, they are more than doubling, but growing way less than revenue. And that gap between revenue and operating expense growth is where all that leverage is coming from. This is one of my favorite charts on Hypercharts because of how easy it is to see that trend. The cash flow, not much cash flow data because the company is so new, but they are investing in basically expanding production capacity as their main expense. We can scroll down to cash. This is the huge cash bump they got after their IPO, about 280 million in the bank. And so the company has plenty of cash on the balance sheet. Moving into some other highlights from the quarter, from the earnings press release, here is where they break down the revenue in fresh and frozen and retail and food service. So I always think this is worth looking into. The fresh platform is really where all the growth is coming from, up 350% year over year. Huge revenue there, 67 or 68 million in net revenue. Although the frozen platform did grow 25% this quarter and was actually shrinking year over year in Q1. So interesting to see that return to growth. But I think the story really here is their fresh products. And then they break it down differently in terms of retail and food service. And as you can see, retail growing almost 200% for the year. Really impressive growth there. And then restaurant and food service even growing faster at almost 500%. And now there's about a 50-50 mix of revenue between retail and food service. Moving into the balance sheet and cash flow highlights, the company has 277 million, like we just saw in the hypercharts, 31 million in debt. So basically a very, very squeaky clean balance sheet. They have used about 22 million of cash in the previous 6 months, so plenty of cash and runway. Additionally, they are raising their full year guidance for 2018 to net revenues of 240 million, an increase of 170% versus 2018. Previous guidance was 210 million. They're also adjusting the EBITDA guidance from break even to actually positive. So both great signs there. In terms of my old estimate, so this is what I was projecting for Beyond Meat in terms of revenue and profits for the next couple of years. This is before they issued their guidance. This is about 2 or 3 months ago, and I made a video, not my last video, but the one before that. As you can see, huge growth, but I actually have had to revise this up significantly, which is why I'm sort of changing my tune on the company a little bit here. So this is what my new financial estimates are. As you can see, old financial estimates, new financial estimates, raising the 2019 revenue from 175 million to 250 million, raising the gross profit, making them actually profitable to a very small amount in 2019 of 5 million. Remember, they just made 2 million last quarter alone. It is worth noting though that on the conference call, they highlighted that Q2 was seasonally stronger. This is one of their seasonally best quarters because of summer grilling season, and that it was be a very strong revenue quarter and profit quarter. So I don't think we're going to see quite this level of growth going forward because of that seasonality. So I think that's important to remember. So that was kind of playing into these projections. And then I have revenue doubling in 2020, gross profit about 35% gross margin. On the conference call, they reiterated they want to have mid to high 30% gross margins long term. So using that, I put in 35%, got me 175 million in gross profit. And then I assumed about 5% operating margin and 25 million in operating income. So here's what we have: a rapidly growing company who's improving, their gross margin and operating income significantly, actually starting to pump out money here in the next couple of years. But the problem is the valuation. And this is where I am revising my estimates upward for Beyond Meat. I'm super impressed with the progress they made. I mean, it's one of the fastest growing companies I've ever seen in the food space in particular. But when you really stack up the numbers against the valuation, it just is so absurd. It cannot get me excited. So let's crunch these numbers quickly. Based on my 2019 financial estimates, 60.2 million shares times 210 per share, $12.6 billion market cap, divided by that 250 million expected revenue, which is above their guidance of 240. We're getting 50.4 times 2019 sales. I mean, absurd price sales ratio. 12.6 billion divided by 5 million in earnings I'm expecting this year, a 2,500 times P/EBIT ratio. And that is a little bit skewed because they're just starting to go profitable, so it will compress dramatically going forward. But that is what it is. And I actually thought it would be worth playing out to 2020 just to see how much cheaper the business gets. 12.6 billion divided by 500 million in sales of my expected 2020 revenue. We're looking at a 25.2 times price sales ratio, still pretty absurd. And 12.6 billion divided by 25 million in my projected EBIT, we're looking at 504 times price EBIT ratio. So these are the numbers: 504 times 2020 earnings, 25 times revenue. I mean, maybe I have to revise my estimates up again and these numbers compress a little bit, but I think at this price of 210 per share, there is just so much growth priced into Beyond Meat that I personally am staying away from the stock. I think it's a really interesting story on a moral and sort of ethical, view of the world level. I'm so excited, and I think it's so inspiring that this company, with a really, really good social mission to really reduce the environmental impact of the food industry overall and give consumers more nutritional options for protein. Like, I think this is a really awesome mission, but I just don't think the moat is there. The valuation seems insane. So it's just personally hard for me to get excited about the stock. But, on the flip side, I'm out here raising my estimates. I never thought the company would be able to improve their gross margin this fast. I never thought they'd be able to produce positive operating income this soon. So they're personally very, very impressing me. Now, the last thing I did want to know is they are doing a secondary share offering. So they're selling stock. I mean, who can blame them? They're selling 3.25 million shares. But what's interesting is 3 million of those shares are being sold by insiders. Only 0.25 million are being sold by the company to get money. So they're only going to raise about 60 million with this new raise. Insiders are selling. So I went into the SEC filing to see which insiders were selling. This is a list of all the 5% or more holders who are selling in the offering. As you can see, the CEO is selling. Gregory Bolin, a director, is selling. the CFO is selling. The director of growth is selling. Diane Carhart, another director, is selling. Kleiner Perkins, one of the early VCs, and Obvious Ventures, another early VC, are also cashing out a pretty big amount. So there are some insiders selling, but on the flip side, although this might concern you a little bit, I did look into Ethan Brown's shares, and for instance, he, the CEO, has like 3 million shares total. So for him to be selling, 30, 40,000, 50,000 shares in this offering that's going to net him, 5 or 10 million is not, to me, that big of a signal. Like, if he was selling a much larger portion of his stock, I would be worried, but it's only a very tiny amount. So I do think that is interesting and worth noting. But I mean, this company priced their IPO at 25. Now it's over 200 3 months later. I mean, I think if you were a VC firm who's in even earlier than that, you kind of be crazy not to take some chips off the table. So that's my recap of Beyond Meat. We have a really exciting growth story firing on all cylinders, but you're paying the price for it if you buy the stock. It's one of the most expensive valuations I've ever seen in my whole life. Would love to know what you think in the comments below. Do you own Beyond Meat stock? Why? What do you think of the valuation and financials of my projections? Leave it below. This is Hyperchange. See you guys next time. Peace.